Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
We've got with us Eric Weiner. He's Bloomberg News Equities America's team leader. He's the author of several books, including What Goes Up, an oral history of Wall Street from the Great Depression through the internet bubble and the 9/11 attacks. He joins us here in the Bloomberg Interactive Brokers studio. You walked in, I asked how you're doing. You said, it's been a day. I think it's fair to say
Can't
that.
You say that every day.
That's what I was just going to say. But I wanted to talk to you about a story that you just edited that talks about retail traders coming in and buying the dip. Is that what we're seeing right now? They haven't been scared away yet?
They have not been scared away. And the money, it's interesting because we're seeing different kinds of buying. So the kind of buying we're seeing is actual individuals going into the market and buying individual stocks or buying ETFs. Big flows coming from these guys. And in the story, which by Esha Day, couldn't recommend it enough. There are some really great quotes about people looking for magic in the market and whatever else. But when you look at the broader indicators of like IRAs and 401ks, that looks a little bit more bearish, actually significantly more bearish. What's happening there appears to be people sort of thinking, should I take my retirement into cash? Should I? Yeah.
That's scary to hear.
Yeah. So
after the selling, just saying, had enough.
It's enough. Right.
Wow.
And that is actually the biggest pile of cash we have. So if that turns bearish, that becomes a very different story because that consistently adds to the stock market going up. There's constantly this pressure of buying. Mm-hmm. Other countries don't have that. So that's unique to the United States, and it's part of our market.
Maybe I'm just like naive here, but I thought that in retirement portfolios, people had like target date funds, and you basically don't touch it until you just don't touch it until you retire. Look, you're not an investment advisor. I'm not going to ask you to give advice here, but I didn't know people played with that money.
They do, and so I do not. That
is off limits.
Yes, that is. And you think about it. You try not to look at it. You think about it once a quarter. You adjust your
Don't
holdings.
Look at it, Carol. Don't look at it.
I haven't looked at it.
Yeah, and it takes a lot.
But I like in my head have like percentages of what's been going on here, and so I don't want to touch it. But anyway, go ahead.
Yeah, and the target date fund thing is important because as you get closer, I'm an old man. As you get closer to retirement, you do different things. You de-risk. You lessen stocks more in stable things. But you do have people who view their IRA or their 401k as a trading vehicle.
Well, and to be fair, we have seen the bond market not do what it's typically supposed to do in an environment where stocks go down. So that could cause some people to maybe freak out.
So how do you make sense of this of someone who follows the markets, right? And you're thinking about the role of retail traders who can be in and out pretty quickly and stuff. Yeah. Maybe it's not that long-term bet. So what does it really indicate about the markets other than it's kind of a play thing?
Well, what they're buying is the traditional stuff. Well, the traditional stuff being like big tech, and the big names, and those they're like fans. Mm-hmm. It's like rooting for your favorite football team, rooting for your favorite baseball team. They're going to buy. They believe in Elon Musk. They're going to keep buying those stocks until they're proven wrong, or until they feel that they're proven wrong. So it's a different kind of mentality. The shifting of retirement funds to de-risking, that's a more programmed move, and that if that is in fact a long-term trend, that actually is troubling.
Does it ever become, if we look at the retail side of this, do we ever get to the point where, and maybe this happened post 2020 and into 2021 when retail really ruled, do we get to a point where retail doesn't have the money to buy the dip?
Yeah, that absolutely happens. The bigger point is that they tend to turn bearish right as the market is ready to turn bullish. It's kind of a contrary indicator if you talk to Wall Street pros. So when they see over enthusiasm among the retail crowd, they kind of get nervous. This would be an indicator of that. But when they start seeing that the fundamentals are strong, growth should be, stock should be moving up, growth is okay, and the retail crowd is going no, that's when actually the Wall Street pros step in and they say there's a contrary indicator.
So, Eric, I feel like if you want to tell a story, you can find the data points, right? So here I am going back to the end of 2022 to today. We're up 40% on the S&P 500. We're down about 8% year to date, almost 9%. So I think that doesn't feel so bad. But I mean, do we have to think about the last 2 years or prior years were maybe off the charts anomalies more so? I don't know, how do you, when you start playing around with numbers, you know what I mean? You can start looking at things a little bit differently.
There are a lot of ways to thin slice this. The big numbers to me are 2 straight years of 20+% returns. That's rare. And that's the kind of thing where, no matter who's president, no matter what the market is, a kind of a pullback would be expected. What's different now is that the political regime changed. And normally that doesn't actually mean all that much, but it really does here. So everybody wants, as soon as, if you take a step back and just look up to the inauguration day on January 20th, or if you look at the day of the tariff announcements, you start seeing a downward trajectory where you see the market reacting to what is going on politically. That's different. So if you were looking at this year and coming in and you're like, it's President X, it doesn't matter who it is, and the plans are just going to be to keep doing what we've been doing, then the market sells off a little bit and you look at it and you say, okay, well, maybe I take some profits here, whatever. But it's not this cataclysmic sweeping up, sweeping down. In that story we talk about, we've had just in the last 14 sessions, we've had 2% down, more than 2% down days, and 2 or 3 2% up days. Which, that's incredible. That's crazy swings. So this is the difference between now and what was going on before, is that this is actually directly related to Washington, and we have no clarity on what's going to come out of there.
All right. Crazy stuff as always. Eric, thank you so much. Appreciate it. Eric Wiener, Senior Editor, Equities Americas, joining us here in studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
As Carol mentioned, we're focused on the stock market, the bond market. Earlier, the S&P 500 rallied as much as 3.4%. These were off of media reports. The U.S. was considering lower levies on China. Then we saw stocks pair gains after Treasury Secretary Scott Bessent cast some doubts on a timely resolution on the U.S.-China trade war. We want to get into what's happening in the bond market because we are seeing long maturity Treasury yields fall, at least felt earlier after the president allayed fears that he would fire Fed Chair Jay Powell. A lot to unpack here. Fortunately, we got Katie Kaminsky with us. She's Chief Research Strategist and Portfolio Manager at Alpha Simplex Group. She joins us from Boston. Katie, it's been a bit since we spoke to you. There's been a lot happening when it comes to the bond market. So we wanted to get your view on really how you're thinking about this asset class in an environment where it's not necessarily behaving in the way that it typically behaves when there's a sell-off in equities.
That is such a good question. It is the most important thing to look at this month. If you look at what happened, equities were down and you didn't see bonds rallying in response to such an extreme event. And to me, this is a suggestion that the market is much more concerned about sort of the vulnerability of U.S. assets, but also the potential for inflation. So both of those narratives are key here. And that means that bonds are just not behaving like the safe haven asset that we love, but gold sure has. So who knows? It's definitely something to note.
Yeah. How do you make sense of that? You're someone who's watched this. First of all, the bond market, when it's not acting like it's supposed to, do alarm bells go off in your brain and you're like, wait a minute?
Oh, definitely. Because, if you think about the typical narrative of this type of move, when you have such a large risk off, trade like we've seen in the last few weeks, although it has been volatile, you often think about the sort of where do you go to find safe haven? And that's usually fixed income. And that's not the case if you think there's a probability that this type of risk-off move could cause dumping of U.S. assets or a lack of trust in sort of U.S. treasuries. And that's what the market has been concerned about. And we've definitely seen some of those signals, albeit days like today and the last couple of days, you're seeing some retraction of that concern. You're seeing a flattening of the yield curve, which would kind of say that people are a little less concerned about that. But it is definitely something we're going to have to watch because bonds are just not behaving how we would think.
Do you think the U.S. is losing its status as the haven, as the safety play, as the central bank to the world?
Well, I mean, that is a clearly important narrative. I mean, look how much the markets have moved based on the independence of the Fed and sort of concern over that. The real concern as well is that when you have flows out of U.S. assets, that they don't get recycled back into U.S. treasuries. And so the concern with that is that we're just losing some of that safe haven status. And it's still too early to tell, but the early indications in the market suggest that we should worry about it and think about it.
It's funny. I think about Katie, for such a long time in terms of U.S. equities, we talked about TINA, right? There is no alternative. And so money just kept coming into the U.S. equity story and markets. So I feel like too, as you say, with the ultimate safe haven, U.S. treasuries, that there was no alternative. Is there realistically, though, an alternative that I understand there are that might give you higher yield but I mean, with the same security and dependency that the U.S. treasuries have, is there an alternative?
Oh, I forgot about TINA, but yeah, I mean,
TINA wasn't that long ago.
I love that. It wasn't that long ago, but it's been a busy month. But
yeah,
that is a really good question, and that's why I think if you look at the only place people have run to is gold, which and that has been such a big story because there's just people don't know what that alternative is yet, and there's still questionability of whether or not treasuries could be more vulnerable, and so I think we're going to have to really. I don't know the answer, and I think the market doesn't know the answer. So at this point, the alternatives aren't clear, especially in a world where inflation could be an issue. Definitely.
So the whipsaw, the back and forth, is there a point, this is something we talk about like with our Gina Martin Adams in terms and other market strategists and like yourself, where there's a point where there's just so much back and forth that investors are like, I'm out, and there's long-term implications. I don't know, help me in terms of the markets here, the treasury trade. Is there a point where global investors truly say, I'm out? And what is that? Is it Fed Chair Jay Powell being removed? Is it the constant back and forth? Like, what is that tipping point where investors are like, I can't do this anymore?
Well, I mean, we have seen those type of actions in terms of speculative volumes.
Yeah.
When you look at signals, signals have really reduced, and generally technical signals have become very muted. And that's consistent with sort of investor behavior as well. I'd say that, even though you've seen a lot of swings, there definitely becomes a point where people just wait. And I think if we get into that situation, it could take a little bit of time for them to get risk back on the table. I think this week is a good example that, there are still people looking for that, recovery. They're looking for sort of potential opportunities, which means that it's not there yet, but a lot of people have de-risked substantially already, and they may not be coming back right away.
Katie, I want to go back to something that you said that you have your eye on, which is the status of the U.S. as this haven, as the dollar as as the safety or haven currency, the U.S. Treasury market as one where people can rely on, backed by the full faith and credit of the U.S. government. You said you're watching that status closely, but let's play that out a little bit. What happens if the U.S. does lose its status? What are the implications of that?
Well, it would be massive flow into other assets and potential for dumping of U.S. treasuries. And what that would do is steepen the U.S. yield curve. And that's why we've specifically seen that type of movement, but not an extremity. So I think it's really a question of flows and preferences, and that could be disadvantageous to U.S. assets, depending, of course, on how extreme it would be. We've already seen massive flows to the yen and the euro, and I think as we navigate those trends, if they continue much longer, that will get people concerned.
What about the auctions? We had a 5-year today. We did see demand rising at that $70 billion sale of 5-year notes. How closely are you watching the auctions? What are they telling you in terms of investor demand and still having confidence in the U.S. government?
Well, I'd say, the auctions have been reasonable, and there's been plenty of demand. So that is a positive sign. Where we see the trends that are more concerning is actually in the market pricing, less so in sort of the demand for auctions. And sort of imagine that, auctions is sort of newly issued treasuries, but there's a lot of treasuries that people are holding. And I think that is going to be a little harder to measure, and that will come out in sort of pricing as well. So I think it's really going to be watching if this theme accelerates more or if it calms down. And we're already seeing that in the policy right now, that there's sort of a backtrack to kind of avoid some of that. So that may be something that they're actually really thinking about, even though they may not be saying that.
Well, that's right. In our last minute, do you feel like things are calming down, or is it that even the back and forth is calming down a little bit?
I'd say that, people are becoming a little bit numb to it a little bit, I'd say. But I think if you look at the size of the moves, 3% moves, I know that it abated some today, are large moves. Generally, I would estimate those roughly as a 3 sigma move for the S&P in a day. We have those every day now. So, so I think there's some of that, kind of people fatigue, uncertainty fatigue. But there is also sort of some backtracking and some positive news that sort of maybe it's not as extreme as I had thought, and that has an ability to kind of calm investors a little bit. But I think it's going to take time. What's
more likely in this last 30 seconds, 10-year getting back up to 5% or going back down to 4 or below?
Oh, I think I'm definitely more of a, more of a bear. Yeah. So I would say 5% seems likely to me at some point, especially if we see inflation prints later this year bigger, and outside of what people would have liked due to tariff impacts. So that's definitely possible.
5% in 2025?
Possibly. We'll have to see how the CPI moves.
A lot coming at us. Katie, thank you so much, tying it all up so nicely. Katie Kaminsky, she's Chief Research Strategist, Portfolio Manager over at Alpha Simplex Group, joining us from Boston, Massachusetts.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Because as we mentioned, IBM just out with numbers. Shares were higher in the after hours, now down about 3% as we speak. I want to bring in Brent Thill. He's Senior Technology Research Analyst at Jefferies. He joins us from the West Coast. He's had literally 6 minutes to look at these numbers. Brent, what is your view? Because at first in the after hours, and look, we have to take this with a grain of salt, but at first in the after hours, investors were happy with what they saw.
Yeah, it's an inline quarter. 2% revenue growth is not going to blow your socks off, but they are leading with 9% software growth, and that was good. The consulting business was expected to be negative; it was flat. Everyone thought, given what's happening with Doge and all these potential economic slowdowns, the first place he would cut are consultants. So, that business being flat was a little bit better than the street thought. So. Cash flow had a really good number, so $4.4 billion versus 2.7 estimate. So, good bottom line, mediocre in line. I think this has been a story that's just stable, steady. Arvind, the CEO, has done a really nice job transforming IBM into a software company versus just a consulting low margin company. And we like their position. To your point, I think no one is going to see what happened with the tariffs or some of the concerns that are in place in April. So these are all March quarter earnings. And again, I think to your point, you're not going to feel this until the second quarter. And so I think investors are obviously excited that hopefully we get some resolution. But if we do see a slowdown, you're not going to see it in Q1 numbers. You're going to see it all in Q2. And most of these companies are probably not going to guide for it because they haven't seen it disappear out of their pipeline in the last couple of weeks. So we're keeping a close eye on it. But overall, I think just expectations across tech just got too bearish. Our conversations with investors, institutional investors, is they just didn't want to touch any of these names with a 10-foot pole, and everything got oversold. And so we're now in a situation where ServiceNow is bouncing, IBM's bouncing, the rest of the industry and tech is bouncing because it's been the most hated group year to date.
Well, what's interesting too, and the chief financial officer, Jim Kavanaugh, saying specifically that about 15 of IBM's contracts with the federal government have been canceled or paused, amounting to about $100 million in future payments. There is that, but they did, I'm just looking here. So they did give, though, a forecast, and they do say, forgive me as I'm looking through. In response, IBM took the unusual step of giving quarterly guidance, saying that sales will be about 16.4 to 16.8 billion in the period ending in June. Analysts on average had projected about 16.3 billion. That they're willing to commit to a second quarter revenue guidance tells you what?
Well, again, this is a highly recurring revenue basis. So
Okay.
I think the more granularity, the better. And I think ultimately every CFO is saying they have to put in a little more conservatism in the guide based on everything that's going on. I mean, no one knows which way is up right now in some of the macro indicators. And so it's, again, I think some of these pipelines are misleading. I think some of these software companies have done a disservice and not been a little more conservative. And so I guess what I think they're trying to showcase is that they have obviously visibility, they have recurring contracts, and they've taken into account some of these changes. So I think IBM's been on a multi-quarter, if not now multi-year, rejuvenation and re-excitement around the software business. And investors keep scratching their head. Why does the stock keep going higher? It's going higher because they're cutting out the low margin business consulting and they're leaning into the high margin software business.
Right.
And Arvin, the CEO, is a software guy. He wants this to be a software led organization, not consulting, not hardware. And there's an element of AI and there's an element of quantum computing. Quantum is still a long ways out, but there's an element where you can own that. So, stock has outperformed. It's down a little bit. I think just probably on was it enough? I mean, stock is up 12% year to date. It's massively outperformed almost everything I cover. I mean, almost every stock I cover is down 12 to 20%. So it's been a parking lot in this storm, and I think everyone has felt like, hey, it's not going to blow your socks off either way. It's going to be stable, steady. They're going through a good transformation. And it's a very well managed and well run company.
Yeah.
So that's a safety spot. Does that wear off now as we go back? We get tariff resolution. Is that going to lag on the up? I think the answer is yes. I would much rather own Amazon, Microsoft, a handful of other names than IBM right here.
And I do just want to point out that the company also reaffirming its fiscal year forecast. So there is that as well.
Okay. Hey, Brent, I'm curious about the move toward more software and services, less so with consulting, less so with hardware at IBM. Given that Arvind Krishna, the CEO, wants to do that and has been doing that, who are their biggest competitors out there that they're selling against?
Oracle, Microsoft, all the hyperscalers, Google, Microsoft, Amazon. So like it's, I think the way you think of it is, IBM is very big into open source, right? And no religion is right, but there are multiple religions. Same thing in software, right? There's closed source like Microsoft, and then there's open source like IBM. And IBM firmly believes in an open source world. And so a lot of big enterprises believe in that world. And I think IBM has a really good perspective. They also do very well in regulated industries, government, financial services, where you have a lot of big, heavy on-prem workloads, right? They don't move them to Amazon or Google public cloud. And so they work with some of the largest organizations out there. So they tend to thrive really well in that environment. And so, the competitors, on the cloud side are Amazon, Microsoft. On the traditional enterprise side, it's Oracle, and others in that category. But I think, what IBM has said, and I think this is a good strategic change, is, look, we can't do everything with our own portfolio. We'll sell Salesforce, we'll sell Adobe, we'll partner. We want to lead with our software, but if it doesn't work for you, we'll lead with others. It's like a contractor. Like, no one should just use their own wood. Like, I'm going to use someone else's wood in Windows, and this window from Anderson might be better than this window from Marvin. So, like, let's sell it all. And that helps their overall credibility as being independent, driving the consulting business. So it's I think it's a good strategy. Is it the one, again, that is going to be hyper growth and the excitement in the world, the way the world is going? I don't believe so. I think still, when you look at the growth rates inside Microsoft growing double digits in software and growing Azure at 30, Amazon still growing their AWS cloud business and in the high teens. These are way more exciting growth businesses. So, again, kudos to IBM. I'm a huge believer of how they've architected this.
Yeah.
From a stock perspective. I just think there's way better ways to play offense, especially in a world that's gotten hit hard in tech. You're going to make a lot more money owning some of these other names in tech.
All right, Brent Thill, thanks so much for joining us on IBM. Brent Thill is Senior Technology Research Analyst at Jefferies, joining us from the West Coast.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Tesla shares rising today by more than 5%. The big news last night on the earnings call was that Elon vowed to pull back significantly from his work with the U.S. government and pay more mind to Tesla, and that seemed to assuage investors who were concerned about the car maker's worst quarter in years. We've got Ross Gerber back with us. He's president and CEO at Gerber Kawasaki Wealth and Investment Management. Got about $3.4 billion as of the end of last year under management. He joins us once again from Santa Monica. Ross, we had you on the program yesterday ahead of the earnings call. Now the call is done. You set this threads yesterday that said, ahead of the call, that said this is the worst performance in Tesla's history. Elon will tell everyone about the trillions of TAM and robots taking over the world. Anything to get you not to look at the facts. As Elon darts off to XAI after he announces he's leaving Doge, Tesla's in bad shape. I'll just leave it there. I'm not going to read the whole thing.
I think I said it was a hot mess or something like that.
Something like that. Let's just say that. We'll keep it at that. Do you, now that the call happened, do you stand by that? Did he manage, in your view, to move people's attention away from the cars?
I'm surprised people aren't like, how did you know? How did you know? And I was like, well, because he's a special government employee. He has to leave by May. It's not like he's doing some gift to anybody. He actually has to leave the government by May. But I think this perception that somehow Elon's going to come back to Tesla and be working at Tesla more is a false perception, because I'm also involved with XAI and I'm an investor in XAI. So I know exactly what's going on there. And they just merged with Twitter. And now they're raising even more capital to even get bigger to compete with chat and all the other LLMs. And that's his main focus. And that's what he really cares about. So I think, it's nice what he says, but it's what he does that will ultimately matter.
Well, and we love talking to you, and we have for a few years now. And we always remind, and I always go here, that, you're not only just an investor in the company or various Elon properties, but you have owned Teslas.
He's got a Cybertruck.
Multiple.
I got a Cybertruck.
You got a Cybertruck, but
I drive a Cybertruck.
But
he still drives a Cybertruck.
But it's not so easy to drive a Cybertruck, is it? Anymore.
I drive it right down the middle of Woke Avenue, you know what I mean? Which is where I live. And, fortunately everybody else has a Tesla, so it's kind of hard to yell at a guy in a Cybertruck from your Tesla, right?
Yeah.
And this is probably the biggest issue that I have, is I feel like Tesla is not Elon's company. It's a public company that's owned 87% by the public, not Elon. And now the perception going from being this climate-friendly, changing the world for a better place company to being associated with Elon Musk and Donald Trump is really one of the saddest things that I can imagine for Tesla's brand. So I kind of am like fighting back from that, because I'm like, no, I drive an environmentally friendly truck, and you're yelling at me from a Ford F-150, and Henry Ford was an actual Nazi. So I'm like, this is really odd that an oil-loving, Nazi-driving car guy is flicking me off, you know?
Do you like the Cybertruck? There's a lot of reports online about parts falling off, though I have read a lot about how people love it. Hannah Elliott loved driving it around last year. Do you like it?
You know, and this is, Tesla should be paying me to do ads for the Cybertruck because I actually love the Cybertruck. The Cybertruck saved my life during the Palisades fire. I can give you 5 reasons why you should have a Cybertruck. And I can also tell you 5 things that are disappointing about the Cybertruck that could have been better or could be better in new versions of it to make the car sell better. You know, so I know the truck in and out. And part of the performance on the manufacturing side is very disappointing. I have not had those problems personally. My truck has been solid. You know, I let some kid drive it. He crashed it. They fixed it quickly. You know, the car's been great. The car's been great. But I can't tell you how important it was to my survival, actually, during one of the hardest periods of time of my life.
Is it because of the air filtration? Like, what?
Yes.
How did you use it?
Wow.
Yeah. The air filtration is what saved my life because I was in the middle of the fire and I couldn't breathe. And so I was trying to fight the fire like an idiot. But this was before the firemen came and saved me. And it was so smoky that I had an N95 mask that I was like dying. And so I would like jump into the truck and I had the HEPA filter thing running and it works, you know?
Yeah.
And so I could breathe and then I would jump out of the truck and then like try to deal with fire. And then I could only deal with that for so long before I have to get back in. The other thing about the truck, you know, was the tonneau. You know, it's a hard tonneau. So when I put all my stuff, I was living out of my truck for 2 months and it locks. And this is a really nice thing where most pickup trucks don't have a way to cover and lock everything in your bed. And so I was able to basically keep all of my important belongings safe in this truck. And one of the things that happened after the fire was looters were attacking people's cars knowing that they had all their stuff in it. And a lot of people got stuff stolen out of their cars even after they dealt with the fire, which just sucked, you know, and that was not a problem I had. So, you know, there are many things about this truck that are great and the story just isn't being told.
Are you okay? Your family, your loved ones okay now? Yeah.
My family's great. I'm not okay, I guess is the best way to put it. I've moved back into my house. I'm one of the few people that survived this fire. The fire ended 2 blocks from my house where I fought it, and the firemen ultimately stopped it. And so my neighborhood's, you know, normal, except nobody lives there yet, except for me. You know, I was able to fix my house pretty quickly, and I felt it was best for me and my family to move back as quickly as possible. And that's been true, you know, but I live a very surreal life, you know, right next to the edge of hell. And I see it every day and it sucks. And you know, for me, I'm mostly suffering from, you know, some level of depression and, you know, PTSD from the event itself, which was really traumatic. Like, I don't recommend fighting fighters.
We can only imagine. And we, from afar, watching, you know, certainly felt it, but I can't even imagine seeing it firsthand.
But I'm doing better. You know, I'm doing better.
Good.
You know.
Good.
It's hard to see it every day, though. You know, it's hard.
No easy turn. And I want to go back to something that really struck me. And we wish you well. You know that. No,
I'm good. I'm good.
Okay,
I'm best off compared to so many other people. So
I know. But still, you know, life keeps throwing us challenges and some are tougher than others.
Sure. Everybody has them.
Well, speaking of challenges, and forgive me for this segue, but one of the things that struck me, you know, we've been lucky to talk with you. This is, you know, our second time in the last 24 hours. And one of the things that continue to kind of, Tim and I want to know more and more, and you really shed some great color, and I want to share it with our audience who are watching and listening right now, who may have missed it yesterday, of what you had to say about what's going on in terms of EVs in China. I think we don't have any concept of how sophisticated, how good they are getting on stuff like EVs and other things.
Well, you know, once again, I haven't been to China. I only know because I follow all the car companies in China. And you know, there's a big misperception about China, I think, and you saw it a little bit with the trade negotiations, like they're somehow behind us in technology and like we're holding back our technology from them and that will slow them down. That is a wildly incorrect way to look at China. If we hold our technology back from China, what happens is they develop even better technology because we force them to, in a way, and they're extremely determined, intelligent people who will work extremely hard to achieve whatever goal they need to achieve. And so when Tesla came to China, Tesla was the first company in China said, you can have 100% ownership of the factory, come here with open arms. And we had never really seen that before with companies where China always made them do a JV where they would own half the company kind of thing. And so the part of that strategy was to send a whole new generation of Chinese workers to work for Tesla to learn how to do stuff. Mm-hmm. And they have. And so you have Chinese entrepreneurialism, which is pretty good for a communist country. And then you add in know-how and government support, and you get a pretty potent way to develop pretty good vehicles. And that's what they've done. And so China's built a whole new infrastructure around electric vehicles, which was actually my dream for the United States.
So that raises the question, Ross, since China's EVs are so good, and those are not available here in the U.S., right, should investors really think about the U.S. being the only market for Tesla because it can't compete outside of the U.S.?
Well, no. Tesla can compete anywhere. Can
it compete on price? Can it compete on quality?
It can. Once again, if Tesla had a focused CEO who wanted to beat the Chinese competition, they could have released that Cybercab as a Model 2 with a steering wheel on it and made that thing for $25,000. Like, people would buy it. It would be really successful. The problem with Tesla is they don't want to sell cars anymore. It's fairly obvious. In fact, they work really hard to convince people not to buy their cars. Mm-hmm. I mean, it's like the CEO every day talks people out of the products. So the real issue to me is, if you don't really want to sell cars and you want to sell cab rides instead or robots, boy, that's going to be a long time till it makes $100 billion in revenue. You know what I mean?
Yeah.
So the Chinese are like, okay, we're fine with this, and Tesla's falling behind, and they're attacking everywhere they can. The Europeans and the United States have a lot of trade barriers against these Chinese vehicles because they're inexpensive and They sell very well. And I was in Mexico City, all you see are BYDs. They can't afford a Tesla,
Yeah.
And so I think quality, Europe and the United States, more Europe has always won on quality of vehicles. Like design and interior style and things like that, where China seems to be behind on that. But when it comes to technology, China seems to be well ahead.
All right, 30 seconds left here just to wrap up, Ross. Elon gets into your cyber truck, not exactly car karaoke, but you guys have a conversation.
They know each other. Elon has responded to Ross. I've seen the tweets.
Yeah, he knows me.
Ross is an investor in XAI.
I know he knows you. So what's the 30-second question you ask him?
Why do you think he said he's coming back to Tesla? Because he knows I've been saying it every day for like months.
So that's what you ask him?
What would I say to Elon?
Yeah, 30 seconds.
The same thing I said to Elon when I first met Elon long ago, when he was tweeting a bunch of garbage and Tesla was struggling. I think it was the end of 2018. And like, I was like, dude, you got to stop tweeting this garbage. This was like 7 years ago. You know what I mean?
Yeah.
And I was like, how is this the mission? And we got to raise money and we got to save Tesla. And like, this is just not helping. And I remember him looking at me sort of like, yeah, right. Sure. You think I care what you say about my Twitter? And I was like, please, just like, I'm just saying this as nicely. And I remember, because I was standing with somebody from ARK Investments and people were pretty surprised that I confronted him about Twitter. And I was a little bit nervous because he's a big guy. And, I like Elon at the time. And so I was trying to be nice, and of course, he didn't stop tweeting and he raised money the next day, which we invested in Tesla at that time. And it was extremely profitable. And I would say the same thing to him today. And it's like, I don't have to agree with your opinions and your viewpoint in life, but do you have to share that with everybody all the time? It's not necessary and it's not helping you be successful. So why share opinions that are so unpalatable to so many people when it's completely hurting you from achieving your goals? That's what I would say.
All right. Good stuff, Elon. If you're listening, we'd love to hear what you would respond to Ross. Ross, thank you so much for all of it and for being so honest and real. Ross Gerber, he's president and CEO. Stay safe, be well, of course, of Gerber Kawasaki Wealth and Investment Management out there in Santa Monica.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.